Namaste. We've all been following the discourse of how capitalism needs to change, improve, evolve. We've gone from a single bottom line, profits, to the triple bottom line of profits, planet, and people. This triple bottom line has also now evolved into the quadruple bottom line of profits, planet, people, and purpose. We are also seeing the convergence of ideas such as mindful capitalism, thoughtful capitalism, conscious capitalism, social enterprises, and so on. In the world of capital, where I spend a lot of my time these days, we've seen an evolution of sustainable capitalism, sustainability, responsible investing, socially responsible investing. The United Nations, in fact, has put together something they call the Principles of Responsible Investing, which is a pretty deep, broad framework with a rating system, fairly detailed, which guides how allocators of capital allocate money to funds. What's behind all this? What's driving all this? The cycle of excessive consumption that we have seen over the last few decades has got to the point, if the 7.5 billion people in the world consume like an average American, it will take approximately 5.3 Earths to fulfill that. Just think about that. More recently, we have all experienced the ill effects of the global financial crisis that happened in 2007, 2008. We all observed the underbelly, the ugliness of what can happen with capitalism when it goes off the rails. We've also seen in our own environments, personal environments, how individuals have reacted with angst to what's happening in the workplace today. There's a tremendous amount of stress, there's impact on their well-being. Not to mention the immense number of scandals coming out of the corporate world with executive pay. You have some companies where CEOs are paid 100x, 100 times the lowest wage in their companies. We're seeing scandal after scandal in terms of lobbies that are ensuring that markets are distorted. We're seeing sexual harassment. We're seeing child labor. We're seeing exploitation of labor in very poor countries. The point here is that evolution of capital has started to absorb these changes that are happening. The other big push force is activism, shareholders, many of them individual, retail shareholders, environmental activists, as well as active boards are starting to push back as well. I've called it Dharmic capitalism. To me, Dharmic capitalism represents an end state, perhaps a state of equilibrium of where capitalism can get to and will be sustainable. Dharma, to me, which is where I derive the notion of Dharmic capitalism, Dharma means the purest form or the essence of something. So Dharmic capitalism represents the purest form of all the possibilities of capitalism. That's where we want to see this ultimately evolve to. I'd like to share with you some of my experiences, first as an entrepreneur in the 90s, later as a corporate CEO in the mid-2000s, and then as a partner in a global hedge fund in the late 2000s, and finally today in my current avatar as a partner in a private equity firm. Back in the 90s, it was the go-go days of growth. I mean, it was extremely exciting. You saw the dot-com boom happening. Enterprises were in rapid pursuit of growth and profit. And I was living in New York at that point. I had co-founded and I was CEO of a technology integration company. We did a bunch of management consulting at the higher end, working with Fortune 1000 companies. And we also then did some downstream work in terms of technology integration for enterprises. But something started to gnaw in me. We realized that there was this chase happening, and a lot of it was about fast money. It was speed, speed, speed. We started to sense that there was something missing in terms of some intangible quality. Also at that time as a CEO, I was pondering about, I had these, I should call it a transnational company. We were too small to be called a multinational company. In a very simple way, I started to think about, I'd grown up listening to a lot of jazz, Shakti, John McLaughlin, meeting El Shankar and so on. And I said, hey, how about East meets West? And why don't we think about profits and people? And this was before, the notion of the triple bottom line had evolved and had got documented. In just an intuitive way, we said, we need to soften this a little bit. And we came up with this idea of, let's combine the professionalism of Western organizations with the empathy that comes out of India. Almost corny, you would say, but it worked really well because we realized that while people were hustling for getting business, delivering business, working with high-end clients, doing transformational work, there was this need for them to feel a sense of empathy at the end of a day's work. And one of the things we did in the company was we created a structure and we actually had people working closely, and this is back in the mid-90s, by the way, mid to late 90s we're talking about. We actually dedicated resources so that people would have people to talk to. So this is the people aspect of the quadruple bottom line. The other important dimension to this was many of our employees out of India came from smaller towns, and every single one of them was impacting 30 more lives. So essentially, we were starting to work with their causes in towns and villages, and through this process, we were able to have a very natural way of delivering a social impact as well through that process. So this was back in the 90s. Cut to the mid-2000s, I was turnaround CEO of a technology company again. And this was again a very interesting company. We were doing a bunch of innovation. We were building IP. We were investing heavily in domain knowledge. We had lots of bankers in the team. It was a global company again. And here I was older, I was a little wiser, and I was also thinking about how do we institutionalize something like this? What happened earlier was intuitive, but this is a much larger company, and we said, let's try and institutionalize this. And I kind of leaned on my strategic thinking background, and I said, hey, how about a strategic framework? So we sort of applied the four-way framework to thinking about how could we generate a more sustainable entity. So top down, bottom up, inside out, outside in. That's the four ways. From a top-down perspective, I had spent some time studying the Vedanta. So I was thinking about leadership in the context of the Vedanta, and I came up with this notion of yogi leadership. So who's a yogi? We all know about the Hatha Yoga and the asanas and so on, but essentially a yogi is someone who's connected with his or her higher sense, far more aware of the higher potential that exists within each person. So as a yogi, you start to think about what's my higher potential? What's my higher purpose? And you start to try and build that awareness. Now, it's crucial for us to think about leadership like this, especially in that context, because what we wanted to do as a culture is we wanted to generate the power of leadership down the organization. We wanted multiple leaders. We did not want a feudal culture in the company where there was just a bunch of leaders and a bunch of instruction takers. Especially in a complex business environment, the further and deeper you push the characteristics of leadership, where people start to examine their own potential for growth and their own sense of what is possible when they achieve a higher potential, voila, you actually see leadership start to blossom and develop. That creates a very different sense of dynamic in terms of both competence. People are starting to do great things they never thought it was possible because of the fact that they were thinking more deeply about this, and we had created an environment to push leadership down. So this, from a top-down point of view, it signaled that we were committed to building a wholesome organization where everybody could participate, everybody could evolve to their potential. From a bottom-up point of view, it was a lot about culture. The big aspect here was purpose. So we started to build a platform of social engagement, and we realized that everybody has their own little passion. Somebody wants to help with poor people. Somebody wants to help with old people. Somebody wants to help with education. There's some who want to focus on the disabled. So we created this enterprise-wide platform to allow people to express their beliefs in terms of what they would like to do in terms of social engagement. Now suddenly there was this other dimension of engagement, not only with the organization, but also with their own higher sense of purpose. So bottom up, there was this culture, right? There was social engagement, we empowered people, we said take risks, go get innovation. This is all in keeping with the top-down yogi leadership approach of trying to fulfill your higher potential. Inside out, obviously, as a public company, we were listed. We had to, ensure that our policy practices, we had best practices, policy procedures, everything had to make sure that, we were kosher in terms of governance, at the same time aligned with the vision of the company. Outside in, again, a very important facet. How do you create a culture where people have the strength of character, the strength of purpose to receive feedback? It's a tough world out there. You're getting beaten by competition, your clients are beating you up. If you have a 360-degree assessment process, everybody's beating you up. So the ability and the strength of character and purpose to receive feedback and apply it in a very meaningful way, again, helped the process of creating an evolved organization. So here what did we do? We essentially ticked the profits box, obviously we're a public company, the people box, as well as purpose. Implement a Dharmic or a sustainable approach to an enterprise. My next experience was actually very different. I joined a hedge fund as a partner in New York. And this is a very interesting hedge fund because what we were doing is we were building a platform, a software platform, to implement financial economics ideas systematically. Systematically meant the CIO doesn't make any manual calls. The platform decides. It spits out a model portfolio and you invest and you do your stock picking based on that. Obviously the research guys were extraordinary guys. We had like a team of about 15 people from the top schools in the US, mostly PhDs in either financial economics, finance, or economics, behavioral finance. We combined all these ideas. And you've probably heard the word alpha. It is all about generating alpha. How do you beat the market? At the same time, there was a degree of churn within the fund. We were thinking, hey, is this all, we've got this amazing platform. We've got these MIT computer scientists who've helped us build this capability, almost like an expert system in financial economics. Let's do something a little more meaningful. So we brought in this idea of sustainability investing into a systematic platform. So what did we do? Now, typically, sustainability is standing on three pillars: environmental pillar, social pillar, and the governance pillar. So you think about this ESG, there's an ability for us to look at public companies. There's a lot of data out there, and try and assess which companies are scoring high on ESG parameters, and which companies are scoring low. Now, we have the job to build a portfolio that will go long and short on stocks. So we said, let's do this. We'll take companies that are high on ESG parameters, and we'll allocate more money to some companies that actually are scoring high. The reason is because we believed the more sustainably aware an organization is, the better they will do in terms of profits. That was a fundamental belief. So you go long, you allocate more money to companies with higher ESG scores. On the other side, you had companies with terrible ESG scores, violating environment norms. You could clearly see they had no commitment to social practices. Governance, patchy. We said, okay, we can do two things with them. One is we can short them, or we can eliminate them from our portfolio. So in a very interesting way, and these are large public companies in America, that we said, let's influence the idea of sustainability. And through this hedge fund platform, we were able to do this. Interestingly, at that time, Al Gore and a bunch of people put together a company called Generation Capital to demonstrate to the world that actually you could attract capital. And today, when you see there is a notion called impact investing, it's come a long way, by the way. Sustainable investing has actually traversed. Impact investing has started to become fairly mainstream. There are a lot of allocators of capital now who will say, we want to express our beliefs through our money. So when I invest, it's not, of course I want the profit, of course I want the return. But they also know, as very savvy people, that the volatility of their investments and the risk in their investments is lower when you invest through an impact framework. Because you're investing in companies that can actually sustain themselves more meaningfully in the long term. So that was the experience that we had, and we tried to engage. So we ticked planet, ESG, we ticked people, we ticked the notion of profits, obviously. It was a hedge fund. Purpose, not quite there in this experience. So cut to my current situation where, like I said, I'm a partner in a private equity firm. Our focus is investing in companies in India. But there's one passion that binds us, which is how do we change the businesses that we invest in? So our philosophy is essentially growth capital. So we come in when the company has gone beyond its survival risk, and we look at sectors that are actually aligned with our experience, and then we start to express ourselves in terms of how can we make a difference beyond that. So first point, how do we choose our sectors? We eliminate sectors that pollute. We eliminate sin sectors, as they are called, right? Tobacco, alcohol, a whole bunch of other related stuff. We eliminate sin sectors. We target sectors on the positive side that actually have a positive impact on the environment. So we target clean tech. So negatively, we have an approach, and we also take a positive, constructive approach. From the standpoint of the people dimension, a big part of what we do is essentially mentor and engage with the leadership team of the companies we invest in. And what we really want to nurture is enlightened leadership here. Because we really believe that enlightened leadership through our mentoring process can unleash tremendous positive forces through the enterprise. So we actually engage as 360 degrees. We go beyond strategy. We help hire people. We really get them to do best practices. And the innovation, the whole point is to get them to go to the next level. So from a people point of view, there's a tremendous amount of commitment that we have through this process. And finally, in terms of purpose, all of us are doing so many things in terms of policy making, mentoring, beyond our portfolios. And we're engaging with various ecosystems directly through the founders of our companies as well. And through this process, we are not only discovering more purpose for what we do, but we're also ensuring that people have the ability to express a higher purpose for what they do. And I think just being aware of it and engaging in these concepts with the people that you work with goes a very long way. Obviously, profits. We're a private equity fund. We've got investors. We have a mandate. We have a duty to investors. We've got to do that. But again, we've managed now to really tick all 4 boxes of what we talked about earlier as the quadruple bottom line here. So, friends, essentially capitalism has to change from within. I think we all recognize that. We have the think tanks, we have the academics, we have the institutions that can give us research, data, constructs, frameworks to trigger our conscience as well as focus our consciousness. But ultimately, it's up to us to act based on our beliefs. Thank you.